We're now joined by Kiran Mazumdar-Shaw. Do we have her? Okay, there you go. Afternoon, ma'am, and thanks so much for taking the time out and joining in. Very few statements coming out of the mid-year economic review. I'm sure you've gone through it. Your initial thoughts?
Well, it's very obvious that, the economy needs a kickstart, and I think what we are seeing so far are very positive atmospherics in terms of the GST bill and many other bills that have been discussed in the last few weeks. But I think it's very obvious that all these are very gestational in their nature. And I think we need some short-term measures to really boost investment and boost the economy. And today's numbers are clearly saying that something needs to be done far more urgently in terms of boosting growth and, these numbers. I think the oil pricing has certainly come to our rescue in terms of containing our current account deficit and allowing us to even rein in our fiscal deficit. But it's very clear that, there are important measures to be taken. I'm very pleased to see that the Prime Minister has personally got involved in terms of clearing the mega infrastructure projects, and I hope that will kind of improve growth and, positive investor sentiments. Because I think it is time for us to ensure that we address some of the low-hanging opportunities. I think there are a number of taxation issues that need to be addressed head-on. I think there are a number of policy issues such as, the PPP policy. I mean, we have to make it very clear what is the government's position on many of these aspects of PPP when it comes to infrastructure development. So I think short-term measures are now the order of the day.
Okay. Mrs. Shaw, wanted your opinion with regards to, fiscal deficit. We've been talking about how, it looks like a challenge this time round. But do you think that the government could have been a little more proactive when it came to the divestment agenda, considering we just have a few months and they have a huge figure of over 40,000 crores in terms of PSU divestment, which is still on their hands?
Well, I think the government has already initiated that process, and it cannot be done so fast. So I think that is a good step that they've taken, though they have to ramp it up for sure. But I think there are many other aspects. I mean, I think they've got huge challenges in terms of, huge debts and NPAs which they are really contending with. And that's why we are seeing that there is a reluctance to really reduce interest rates. And I think, the fact that they've deferred the reduction of interest rates till the end of this fiscal tells you that, there are certain fiscal challenges that we have to address. The one thing that's come to our rescue, as I said, are the commodity prices, and especially led by oil, that have come down. And that's helped to really, rein in inflation. Now it should not be the other way around. So I think there is a need to boost investment. I think there are a number of positive statements and policy decisions that need to be taken by the government with respect to FDI, with respect to taxation matters, with respect to the Indo-Mauritius tax treaty and, retrospective taxation. There are so many of these that can actually start, paving the way for a more positive sentiment in investment.
Ma'am, a few experts point out that for growth to pick up, the government will have to increase public spending, but the government right now is bound by the fiscal deficit and is actually, and has to actually cut down on expenditure, which will further hurt growth. How do you see the battle between, fiscal deficit as well as growth, and which aspects should the government focus on right now?
See, I really think public spending just from the government is certainly not going to be affordable. And that is why I come back to this whole issue of how can we create a very sustainable PPP model. I think it's very doable, but the government has to be working extra time on coming up with a very strong PPP model. If there is a strong PPP model, believe me, private sector will join hands very willingly with the government in many of these public spending areas.
Okay. Mrs. Shaw, wanted your thoughts on that 5.5% GDP estimate which has come out from the government now. Do you think that we could possibly surpass that 5.5 for the fiscal or maybe come below that? And in your sense, will there be a significant uptick that we could see in FY16, considering that we are now facing more global risks as well?
You know, personally, I'm very, very optimistic about India's economic future. I personally believe that we have a lot to unlock. And I think all this unlocking can only be done with bold measures, with strong and clear policies, and taking some important measures, you know, both short-term and mid-term. But what is happening right now is we are only looking at mid and long-term measures. So these are very gestational positive indicators, but we need short-term positive indicators, which somehow we are still not seeing any visibility. So I think that's where the government needs to focus. What is your next 60-day, 90-day, forecast in terms of what you're going to do in terms of boosting investor confidence and getting money in the system? We don't want money in the stock markets. We want that to translate on the ground in projects and in business. And I think that's where I think we're really finding the challenge, and that's why we're seeing these muted numbers. You know, everyone was expecting, slightly higher GDP growth, but this is what's happening.
Okay, some more statements. Direct tax collection up to November stands at 5.7% year-on-year, while the indirect tax collection up to November stands at 3.29 trillion rupees, so that is up 7.1%. And also, I think Jayant Sinha, the Minister of State Finance, is saying renegotiating the double taxation avoidance treaties to address the capital gains issues. Ma'am, comment on this, taxation. The statement is renegotiating the double taxation avoidance treaties to address the capital gains issues. What can the government do with respect to this?
I think the government knows what has to be done. I don't think there's any need to further discuss this. I think you need to take a very strong call on what you want to do. I think keeping people in limbo is what is causing problems. You decide, you go, one way or another, but make it very clear where you stand. I think that's where the issue is. I mean, having this uncertainty, this, constant kind of debate on these kind of issues is what really makes investors nervous. And I think that's where government has to be very clear. We want this government to be decisive. We want this government to fast-track many of these reforms that we've been talking about. So take a decision, one way or another, so that investors are very clear what they need to do.
So are you disappointed then by the pace of reforms from the new government? And secondly, for how many more years, or even in FY16, do you expect growth to be sub 6%? In this band of 5.5 to 6?
See, I am no soothsayer. All I can say is I'm not disappointed largely by the kind of direction the government is taking, because as I mentioned earlier, they are very, very committed to reforms. But right now what I see is that the reforms that they are really kind of rolling out are going to be gestational reforms, which no doubt will augur well for the economy over the next few years. But what we are really staring at right now is how do we show growth in the near term? And that's where I think they also need to focus on a number of reforms that can actually unlock this kind of value in the near term. That's what I really want to see the government do, and I think the government is seriously looking at it, but that's where they need to be faster.
Okay, by the way, some more statements. The latest strengthening of rupee to hurt exports prospects of some sectors. The rupee has gained about 6.4% this year against all trading partners' currency. Higher capital inflows on improved investor sentiment strengthen the rupee, and about 2.7% of the rupee gain is driven by high inflation, the rest due to capital inflow. Our colleague Lata Venkatesh also joins into this discussion. Lata?
Well, actually, that's a fairly welcome description of events with respect to the rupee and its impact on the Indian economy. The 2.7% rupee appreciation is something that the government is worried about, and that is as it should be. There have been too many mistaken interpretations in India in the past, with a strong rupee getting equated as a strong country. How does the Nikkei operate? Every time the yen falls, the Nikkei rises. Weakening currency is usually good for the economy because it means importers are discouraged and the local economy gets a boost. Less competition from importers. So this is a welcome recognition, and the latest rupee strengthening is going to hurt some sectors' export prospects. I think Kiran is best placed to answer this, isn't it? It's a welcome recognition, you think, Kiran?
Yeah, I think, the rupee has been fairly...
Oh. Okay, I think we'll just set that link with Kiran right in a minute. But we have the veteran economist and statistician, Dr. Pronab Sen, joining us now. He now chairs the Statistical Commission, former Chief Statistician of India. Dr. Sen, there are plenty of statements coming in. Among them is that the latest rupee strengthening to hurt some export sectors. Is this a welcome recognition by the government?
Well, that's difficult to say, because the extent of appreciation wasn't that great anyway.
Okay.
So I think in any case, the government actually saying that the role of the rupee goes beyond the financial sector is, I think, a welcome sign. And hopefully the government will have an active approach towards the exchange rate rather than a passive one.
Okay. Well, Dr. Sen, we were just finishing our Q&A with Kiran Mazumdar-Shaw as well. Kiran, you were saying when we lost that link with you, did exporters feel any jitter at all with the recent lack of depreciation in the rupee, if you please, at a time when all other emerging market currencies were falling?
Well, Lata, actually the way I see it is that the rupee has not moved very much. I think it's been fairly stable and not so volatile. So I think from that point of view, I don't think exporters have been feel jittery at all. I think if you look at how the rupee has swung in the last few weeks and how the rupee has been in the last few months, I think yes, there has been a sort of slight movement here and there. But by and large, I think the rupee has been fairly stable.
All right. Actually, we are still... Kiran, thank you very much actually for joining us and reacting to those incremental lines that we are getting from the mid-year review. Well, that's about the currency. There were also some statements earlier about tax revenues falling short. Some numbers ran on the screen. I'm not able to recall them. But clearly, indirect tax and direct tax revenues have been far short of what the budget expectations were. I think the budget expectations were close to 17% in terms of revenue growth. Dr. Sen, will 4.1% be too challenging for the government unless they crunch plan expenditure?
Well, I'm almost certain they will. In any case, the budgetary expectations on tax collection was optimistic, to say the least. And, they were banking on a strong revival of the economy. So we are talking about 13.5% nominal GDP growth. Now you'd be lucky if you get something like 11.5 to 12%. So they will fall short of taxes. There's no question about it. But that's happened in the last 2 years as well. And the reaction has been compression of plan expenditures. The question that really arises is, will plan expenditures get compressed below what had happened last year? And my suspicion is no, it won't.
Okay.
Not necessarily.
Some more statements, just to update. The finance minister says, Arun Jaitley, lower global crude prices, diesel decontrol to help keep current account deficit low, and current account gap can be financed by capital flows, assure of external stability.
Yeah, I think isn't it stating the obvious, Dr. Sen? No, I mean, there's nothing new information that we are getting on that score, are we?
No, there is new information. I mean, the new information on that is, I don't know whether it is optimism or realism, that foreign capital flows will continue to happen. That in itself is not quite as obvious as one would make it out to be.
Okay, yeah.
Mr. Sen, just one question. Do you get the sense that we are perhaps overestimating growth for the next fiscal year? Because all the signs that we get, even the tax collections so far are it's 5.7% for direct tax, 7.1% for indirect tax. We have companies telling us, many of these consumer durables, that, the demand, the consumer sentiment has not yet picked up, and, there is no great demand on the ground. So do you get the sense that we are overestimating GDP growth for the next fiscal year, and there is a possibility that, it could be even sub 6%?
Well, there's a compositional issue that's involved out here. The fact of the matter is, as far as both indirect taxes and corporate direct taxes are concerned, the same growth coming out of corporate India will lead to much higher tax revenues than the growth coming from the SME sector, which is what has happened in the last 3 years. Okay? Now, so the issue then is, what are the expectations of the distribution of growth between corporates and non-corporate?
Okay. So just to come back to the current year's receipts, Dr. Sen, if planned expenditure cuts are going to be inevitable, then even this 5.5% growth is ambitious?
No, I don't think so. A lot of the expenditures that the government will cut will really be rollovers more than a cut. This is what has happened in the last 2 years as well. You have basically deferred the actual cash outgo to the following financial year, but it doesn't materially change demand conditions. Okay.
We've got tax revenue gains of direct tax revenue, according to the mid-year review, is 5.7% higher up to now, is what it says. I would assume it is the November number, which is already known, April-November number. 5.7% growth on direct taxes and 7.1% growth on indirect taxes. Does that mean that 17% revenue assumptions are going to be definitely impossible? Is that what we should read from the statement?
Pretty much. Although as far as corporate income taxes are concerned, there is a fairly well-defined pattern in them. And the pattern is that when interest rates are high, there is a tendency to actually underpay on the advance taxes and then make it up in the final submissions. And we have had high interest rates this year.
Yes.
So corporate income tax may actually show an unexpected increase in the last quarter.
Oh. So you suspect that the gap may not be as bad as it looks now, and we could probably end in at least double-digit revenue growth.
Yeah, on direct taxes at least. On indirect taxes, I think the question marks are very much there.
Mr. Sen, you said that the planned expenditure cuts this year may not be as much as what we saw last year. How would it compare to last year, according to you?
Yeah. There will be planned expenditure cuts, but I don't think they'll be quite as large as they were. Last year, they were huge.
Okay. All right. I think last year it was about 1 lakh crore, so perhaps less than that.
Yeah. I would imagine 70,000 to 80,000 crores would suffice.
Fair enough. Dr. Sen, that's about all we have in terms of statements from the mid-year economic review.